Robert Kahn, my colleague from Eurasia Group, Managing Director of Global Macro, as I always say, essentially our chief economist. It's great to see you here again.
It's great to be back here with you.
So we spoke together in the spring, during the spring meetings, and you said, I'm going to quote you, "We're heading toward a substantial US recession. We may even be in one now."
Ouch.
Well, what went wrong there?
Or what went right?
Or what went right? Okay,
Yeah.
Better way to look at it.
So, yeah, no, I was wrong. And the big debate now will be whether or not it's a problem deferred or a problem avoided. So what's the news? The news here, the headline here, is the impressive resilience of the US and maybe also the global economy over the last 6 months. Some of it is a narrow, possibly bubble-driven boom in AI and related computer spending, right? It's about a third or even more of US growth comes from that sector. And that's not really a sustainable rate. Part of it also is, I think, some of the dynamics of what went on with Trump's policies on tariffs and on immigration. And for that, let's step back. Why did I get it wrong in the spring? Because I was looking at the president's tariff policies and his policies on immigration, which were going to hit the labor market hard. And I was seeing a tremendous amount of disruption. And whichever side of the political divide you're on, however you think about the longer term implications of that, that type of transition and an extraordinarily high and rapid increase in tariffs looked set to importantly disrupt activity in the near term. We haven't quite seen that. Now, some of that was people stocking up ahead of the anticipation of the tariffs, and they're still working that down. Some of it was a kind of wait and see attitude. One thing that's really striking about the last 6 months is that while the tariffs have raised the cost to American producers and middlemen and the like, the supply chain, through the supply chain, we haven't seen aggressive pass-through to the consumer. And certainly the dynamic I was worrying about in the spring was that
enormous price
increases would be a big hit on consumer sentiment. Consumers would pull back, firms would then lay off workers, and that would create this adverse or difficult cycle.
But that said, Rob, so it's not as though the tariff battles are settled, right? They're still ongoing. As Kristalina Georgieva, IMF chief, said this week, the only thing that's certain is uncertainty right now. So, and a big question mark is US-China and their ongoing trade battle. Talk a little bit about what you're watching when it comes to the Chinese economy and how it impacts America.
Well, the China-US example is a great one because one of the factors we know can be a drag on long-term investment and on adjusting to these tariffs is the uncertainty. Firms need to have a certain predictability and an understanding of where we're heading. And that certainly has been lacking. Part of that is the nature of this extraordinary rewiring of global trade and investment that the president is attempting. Part of it is his own decision-making style, his tendency to move aggressively, sometimes pull back, and then return. And we're seeing this in the US-China relationship. I think it's probably right to say that a number of factors came together recently in this renewed standoff between the US and China. The US started with some new controls on exports. I think from the US perspective, it was a closing of loopholes, not a fundamental change, but the Chinese saw it differently, and they reacted very strongly with a broader rare earth ban. That really crossed red lines. And I think that sense in which it was both sides communicated poorly and maybe misunderstanding is created, but it also shows that the relationship is in a difficult place, that even at times where diplomacy is working, and I think it is working now, we can talk about that, there is a fragility. And it is in the context of a longer term decoupling that I think is likely to remain an important feature of the global economy.
Look, we're only a couple days in here, but to me, that sort of drumbeat of reform and stop using words like gender and climate and all that kind of stuff seems to have been tamp down a little to focus on some core mandates?
I think that's right. I think the Treasury and the U.S. government's focus was always more on the UN and maybe some of the other non-economic agencies than on the IMF and World Bank. Certainly, but I think that the climate and diversity issues are more muted. It's not that there aren't going to be arguments down the road. I think the U.S. has strong views on the role of China in these institutions. That's going to be a flashpoint going forward. And there will be very strong differences on policy support and what we're supporting. But yeah, no, I think it is a much better environment from the point of view of trying to come together to solve problems. I have raised the concern generally that part of the problem of our current moment, this sense of U.S.-China competition, of the U.S. going it alone in so many dimensions, means that if there is a global shock of some sort, and of course at some point there always will be a new shock, that we may lack the committee to save the world that in 2007 and 2008 with the global financial crisis, in 2020 with the pandemic, we're able to assemble quickly and coordinate an international response. That's important. And I hope that we have the capacity to look past some of the current trade disputes and come together if those moments happen.
Let's end right here in DC. This government shutdown is, as we are speaking, on day 14. We know the political implications for sure. What are the economic implications beyond just government jobs? And do you see this impacting growth in Q4?
Going back to our earlier discussion about the AI boom and how it's supporting this recovery, I do worry that the U.S. expansion is very uneven. That is what economists sometimes would call a K-shaped expansion, where parts of the economy are doing quite well. We have strong equity markets. That's increasing wealth for some Americans. Yet on the other hand, I think for a lot of lower and middle income Americans who are living paycheck to paycheck, these are difficult times. And I think that widening gap is a source of fragility. I'd also argue, and I will remain as a concerned observer on this score, that the tariffs are a case of disruption deferred, not disruption avoided. And we are talking to clients of ours, to firms that are telling us that as they go into the fourth quarter, they are going to start to have to make more difficult decisions about firings and about the scale of their production. But to your question, it's traditionally shutdowns have had modest implications for the U.S. economy. Usually they're short. Usually people get back pay. And so particularly if you have money in the bank, you can borrow from that, you can draw from that to maintain your spending, and then when you refurbish your accounts when it's over, and we get back to work. And yes, there's some modest loss, but fundamentally the U.S. economy is not knocked off track. This should be a concern, I think, in a couple of dimensions, that this could be different. We see an administration that has been able to find pots of money to finance activities that would be politically sensitive, like paying the military, trying to deal with things like FAA or the collection of data and the like, and maybe also coming up farmers and the dislocations they're facing. So in some ways, they've avoided some of the hot button issues. It seems like we could be in for a longer shutdown. I think there's a good chance that we may still be talking about this in early November. And of course, then on top of that, the threat of the president to not pay workers for furlough has created a degree of uncertainty. The fact that OMB has actually fired workers rather than simply furloughing them is creating an additional sense of unease and uncertainty. I would think that will, in certain parts of the country, hit hard. And the question is, given this fragile moment, is it enough to have a economy-wide impact? I think this time could be different, but a lot of it depends on what happens the next few weeks.
All right, so the next time we talk, we'll assess how accurate that prediction is. Rob, Kahn, thanks so much.